Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model for Thursday the 8th of the 7th 2021. The time is just gone 04:30 GMT, Asian session coming to a close, European session firing up, our lunchtime North American session. Right, yesterday, Wednesday the 7th then, we had an unopposed negative driver in the euro at minus 89, no backdoor flows, the opposing positive flows mainly going into the dollar at plus 35, into the yen at plus 28, and the pound was the positive rock at plus 26, activity plus or minus 89. Intra-week then becoming more relevant, this is from Monday the 5th, open to about 15 minutes ago. We've got a positive opposed driver in the yen at plus 284, front and backdoor flows mainly coming out the euro at minus 227, out the pound at minus 142, and the dollar was the positive rock at plus 85, activity plus or minus 369. So over the week then, we've had the yen positively driving, the euro sucking up the negative flows, the pound sucking up the negative flows, and the dollar being marginally positive. Now everything else is noise. That basically is what's been happening, and it may not seem like that. Intraday then, this is the Asian session to about 15 minutes ago, we got a negative opposed driver in the pound, minus 89, front and backdoor flows mainly going into the yen at plus 82, into the dollar at plus 21, and the euro is a negative rock at minus 14, activity plus or minus 153. Right, what's going to knock this about then? Well, let's have a look. We've had the RBA speech, Royal Reserve Bank of Australia. They've basically said they're not going to hit their inflation target till about 2024. It's a dovish speech. They've kicked the AUD yet again lower. So there you go. We've got ECB Lagarde speech, and tomorrow Friday the 9th we've got China CPI, ECB Lagarde speech again, and CAD unemployment rate and employment change. Right, so let's get rid of this and have a look at the flows and the asset classes. Our trades are sort of bumping along the bottom. We're about 400 points up at the moment from a peak of 6,500. Now let's have a look at what's going on. Right, so Euro strong, except against the dollar, the yen and the Swiss. The yen is strong across the board. The pound is weak, except against the CAD, excuse me, AUD, NZD, commodity currencies, and the Swiss. The Swiss is strong, except against the yen, which is stronger. The CAD is weak, except against the AUD and the NZD. Excuse me again. AUD is weak, except against the NZD. NZD is weak across the board. Dollar is strong, except against the yen and the Swiss. So what have we got? We've got New Zealand weakness and pretty much AUD weakness, and we've got yen strength. Take your pick in the middle. Right, so let's have a look at the asset classes. The dollar index is a good place to start for an overview. So US dollar index. Basically, you've got this situation. It's broken the recent resistance high. Gold basically it's come off a little bit, but it's half marks. It's 0.5 from the model floor or high. Oil broke, had this massive ramp up, and now it's come back. It's 0.31 from the high. Wall Street sort of dirging around, not making it to the high. It's 0.28 from the high. S&P broke. It's sort of gone slightly down, but it's pretty much up there. Tech likewise broke, and it's plus 0.4 above the recent resistance high, or about the break. US 10-year has basically been chopping around madly, and it's now broken. It's plus 0.25 from the resistance, so it's broken significantly. That's the price, so yields have come right off. The bund, not wishing to be left out, has come up a bit in price, but it's in general terms the US 10-year price has gone up more significantly than the bund. Therefore, we've got this yield modelled yield gap where the US yields are relatively lower than the bund yields at the moment, and that should have a bearing on the Euro USD. It should give a bit of support to the Euro, and yet the Euro's been soft, so interesting. Anyway, so that's that. What else we got? Copper. Copper's basically just been chopping about. It's now 0.4 from the floor, so soft. US steel. Likewise, it's been chopping about. It's 0.27 from the floor. Right, so commodities are soft, etc. Right, so let's just get rid of this and make some final analysis. Right, so given the Fed, we had the Fed minutes last night, and they sort of came in fairly neutral. We're short USD dollar against euro, pound AUD, and short NZD, euro, pound, CAD, AUD. CAD oil's high, but come off a bit. We've had the Fed, which was coming at neutral. The dollar index is pumped. New Zealand is gaining this differential between the AUD policy decisions, central bank divergence. The euro is getting hosed off. The pound's getting hosed off. And that's where we are really. So what you've got this US 10-year telling us the opposite of the dollar index. So you've got the dollar index high, and then you've got the price also high of the US 10-year, which means yields are relatively low. So you've got this divergence there. The market is clearly in a state of turmoil. Copper is just like all over the shop, and it's and yet equities are at or near the highs, and even the Dow is starting to come back a bit on the up. So it looks like there's the massive liquidity QE flows and the spending are doing their job in terms of disrupting normal transmissions, and so we're just going to hang on until normal service is resumed, and we're going to stick with our shorting the USD, shorting the NZD, and looking to scale up on those positions. So hope that was useful. See you again tomorrow for the daily briefing. Thank you very much.